Hi everyone, welcome to the CRT Masterclass. Today we're starting with the scalping strategy. This is for people who want to trade at high frequency, take multiple moves a day, and also aim for larger risk-reward ratios. After that, we'll look at higher time frames for the others, and I'd just say let's start with the strategy. It's extremely easy. The only thing you need is a key level sweep. This can be a fair value gap, a high or a low. For highs or lows, it should be at least on the 1 hour time frame, meaning it happens on the 1 hour chart. Then we need a 30-minute CRT sweep. I'll show you in a moment exactly what that is. Then we need an M1 SMT, simply an SMT on the 1 minute time frame, which we look for, and then we need a standard entry pattern. This is the easiest part, and of course we combine it with higher time frame analysis. An example would be here during the London session. When we have the London open, we simply mark out the highs and lows, and then we see that we are in the discount area of the large swing leg. Here's a little tip from me for the discount area. If you mark the 50% level and the PD array, it can help you determine your bias. If you are still above it, you are long. If you break below it and close below, you can look for shorts. It's a strong PD array. In any case, we haven't closed below it here. That's why I'm still long, because I just see this as a rebalancing of the price leg again, like before. Here we also got a nice reaction, and you can generally see that reactions often occur at this level, so it's a strong support and resistance level, and that's why we're now looking for longs here. We don't have to assume that we'll get the move today, but for a small scalp here, a little reaction, we'll get enough points. Next, we go into the 30-minute time frame, and here we can already see the CRT sweep. What is a CRT sweep? That simply means that we close within the range of the previous candle. I'll mark it more clearly. Here we have the sweep. Sweep, and then we close within the previous range, within the previous candle, and that's all you need. Next, very simply, we mark the rejection block here from the manipulation candle, the candle that swept the previous one and closed inside it with the bodies. And then we set the rejection block here. Let's do it like this so you can see it clearly. And now, so to speak, in the next hour, we expect to set an SMT below the open, then move above it, and then get the move here. Here you can see the rejection block. It now also overlaps here with the close. This is now also or almost the open of the next candle at the same time. And what we want now is an SMT below this open, then a CST, and then we can also enter long. I have the SMT indicator from Kronos here now. I'll also put it in the video description for you. It now automatically marks an M1 SMT for me here, so I don't have to look at the ES. And what we're looking for now is an entry pattern. Here we don't have anything that indicates a reversal, like an M1 fair value gap and so on. That's why I'm switching to the 15-second time frame here. You can see here that we have the SMT, then we break the high here, and at this point you can really either set a limit order or enter at market. As always, stop goes below the SMT and then take profit at the other side of the range or at the obvious high. That would be here. If a 1:2 or 1:3 ratio is enough for you, then you can take that. And if not, of course, you can also target the other side. What you can also do is really look at where the balanced price range ends, and that's here, and then use logical targets here. And then you can see here that we flip the open here. We also shoot through, rebalance the fair value gap again, and then we go higher, and here you would have also taken out the first high. Here, this is a good sign that you are respecting the high quite strongly here. Even if you come down a bit again, you create a new SMT. And then as soon as we also have the SMT, you can trail your stop below here as well. If it then displaces upwards again here and breaks the high. And now in any case, we no longer expect it to break the low. Here it also broke the high, and then you could have trailed up to the SMT here again. I tend to trail more and more aggressively towards the end, because I simply don't want to give back the profits. And you should do the same, even if you end up with a slightly smaller risk-reward ratio. But you can squeeze a lot more out of most moves this way. Let's move on to the next example. Here you can expect a reversal, simply because we were so deep in the discount zone. We had an SMT with ES, and then we can go down to the 30-minute chart and see what happened there. And you can see here we had another internal SMT and then our CRT sweep here. Yes, with that candle, it closed below the range. That's why we can expect to get a bullish market maker model here now. So now we go down to the 1-minute chart and mark the open of the next candle. That's here. Then you can see here that we're already setting SMTs below the open, and now we're just waiting for an entry model. We can also take a look at the 15-second chart. It's a bit tricky if there isn't a strong retrace, but that can happen when we get strong price action. It can then happen that you mark the PD arrays on the left side that were used aggressively, that we go down and then trade out of them, or you just enter here with an inverse. With the inverse, we didn't close above it extremely nicely, but we did close above it. We also had a CRSD here, so you can enter here. But I would first wait for a retracement with a CRSD and then see if you get a short reaction. If you get that, you can enter right away. That's why your entry will probably be a bit worse, and then you can target the other side here. You can see we previously marked the PD array that was used, which caused us to be pushed down aggressively. It worked again here as well. Now we've broken through it. Now we'll just see how we react there. You can see we're respecting it. What we still need to mark are the targets. First, for me, S, the external one, but I would also mark internal highs that stand out strongly. For example, these here, and then you can see that we didn't close above here. That's why we need to watch this more closely now, and in this case, of course, you can already move to break even since you no longer expect us to come back down here anyway, and then you could have gotten stopped out here with a partial or a break even with a partial. What you can see here is that in both cases, we're now back below the open. We're still within this half hour. Here, we're making a small internal SMT, a 3-minute SMT, flipping the open again, and now we would even have a nice entry pattern. Here, 15 seconds that even shot through the open. They close back above it, so this would potentially be another long opportunity. Again, take a partial here at the internal high or observe the reaction, and then you can also target the external again. Then we got a strong move here. You can see here you could have taken partials, but it shot right through and then even used it as support for us to move up, and then it also swept the externals. When you get such small SMTs, a move like this can happen. That's also completely valid. If it comes back and sets another SMT, that's just as valid. That was the scalping strategy. If anything was too complicated, feel free to let me know. Write it in the comments and then I can make a new video about it. Otherwise, I'd say see you in the next video and bye-bye.